since about 2006, from about 2006, Congress, somebody's got their mic open. I'm getting feedback. Okay, so from 2006 on, Congress shut down the earmarking. It was becoming a huge pork barrel issue. It's a way that Congress can, individual congressman can say, I want X number of dollars to go to my particular district to be used for, I don't know, road repairing, building a post office, whatever. It's a way of bringing pork back to your district. And it got so bad that in 2006, 2007, Congress said, time out, we're not going to do it anymore. Well, they changed their mind a couple of years ago. So now they're back to basically earmarking again. And the three languages, terms you would have in there is not to exceed X number of dollars to be used for. That basically is a ceiling. They could also put language of not less than X number of dollars will be used for. That's a floor. But by and large, the language that they provide is exclusively for. Now, that is a ceiling and a floor. So you can't exceed the dollar amount that's in there. And if you exceed the floor, the lower amount that was in there, then you cannot use that leftover appropriation for any other purpose. It just sits on your books until it expires and goes back to the general receipt accounts of the treasury. You can't do anything with it. But generally what we see today is, in every appropriation, is the term exclusively for. There are a couple of appropriation bills that historically over the years have been pork barrel bills. And the big one is the Highway Trust Fund, highway bills. And that was a way that, as there's so many works projects that show up in those highway bills, that was an excellent way for a representative to get money right back to his or her district. Voluntary services. This amounts to, by the way, look at this. This went all the way back to 1884. And this statute is still on the books in this format. An officer or employee of the U.S. government or the District of Columbia government may not accept voluntary services for either government or employ personal services exceeding that authorized by law, except, I mentioned this to you when I started, for emergencies involving the safety of human life or the protection of property. So that's where we identify those people that are necessary at the end of a fiscal year when we feel that tomorrow morning we're not going to have an appropriation. And then theoretically, if there's no appropriation and you worked, that would be treated as voluntary services. Not supposed to do that. Now there's a story on this. This was passed way back in the 1880s when we did not have a career civil service system. I saw something the other day that somebody is talking about or proposing. I don't know who it was or what organization it is, but somebody's saying that maybe what we need to do in the federal government is have term limits, which we don't have, that we have a constitutional amendment that would restrict, let's say, term limits to 12 years for representatives, 12 years for senators, and 12 years for government employees. That's the way it was back here. 1884, let's say 1880s, you elect a president. President brings in his buddies to be the heads of the agencies. They go out and bring in their buddies to run the agencies. 4 years later, you elect a new president. Everybody goes home, including all the people that were in the agencies. There was no career federal service. Everybody went home. Now, what happened during this period of time was I'm an agency head, and I received an appropriation from the Congress to run my agency, and it turns out I didn't have enough funds to pay you, or maybe pay you 100%. So I ask you as an employee, hey, listen, Bill, I need you to work this weekend, but I only have enough monies to pay you for 6 days of work, not 8 days of work. Do you want to do that? And Bill probably said no. And well, what happened? He says, well, you're fired. Go home. I'll find somebody else to come up here and work. Bill worked, and then Bill filed a claim against the government for the 2 days of unpaid compensation. And guess what the courts did? They awarded it. So Congress passed this legislation saying you cannot do that anymore. It's a violation of the ADA. You're committing an Anti-Deficiency Act violation because you're augmenting your appropriations when you're allowing people to work for nothing when they should be paid. That's an augmentation of your appropriation. You can't do that. It was to protect the government from winding up having to pay these back payments. Now, I was doing a job out at Edwards Air Force Base. Again, I mentioned that to you the other day. It's up there in the high desert, kind of God's country. And there was weeds growing all over the place. And, I asked the people in the class, I said, what's with all the weeds around here? I said, I've never seen this before. I've come out here for years, and basically it's, Air Force Base. It's spick and span. It always looks good. And they said, well, we volunteered to bring in our weed whackers, to bring in lawnmowers, to clean our property. We, the people, the employees. And we were told by the commander we could not do that. And I said, oh, good. Then he knows what 31 U.S. Code 1342 is. He said, no, he had no idea what that was. But the reason he did it is he wanted, when the Air Force Logistics Commander 4-star came out to Edwards Air Force Base, he wanted him to see what deplorable condition the base was in because they had not given AFLC, the higher headquarters, Major Command, had not given him enough money to take care of base housekeeping, maintenance work. He did it, but for the wrong reason. He should have known it wouldn't have been legal to have them come in on the weekend with lawnmowers and weed whackers. You can't do that. Now, I need you to jot down a few things on this PowerPoint. Make sure you underline safety of human life and or the protection of property. But here's what I want you to write on there. Agencies do not have broad discretion in determining that cover life or property. Agent in determining operations that cover life or property. Okay. There are some examples about statutory authority, unless authorized by law. Red Cross volunteers. See that in DOD all the time. Candy stripers in your hospitals. Bet you see that all the time. Museum volunteers. People that run some of the military museums that we have at some of our post camps and stations. Volunteers. Again, because it's authorized in statute. I was over in Hawaii doing a class. Got to this. Guy comes up to me at the break and he says, need to ask you a question here about volunteer work. He says, our comptroller over at Hickam Air Force Base in Hawaii has brought in the spouses of military members to help in building the budget. He's doing it because he wants to give them budget analyst experience so that they can qualify for a government job. So let's say they rotate to another air base, and now they apply for a GS-9 job, GS-579 job. Now they've got some experience that they can use to qualify for that job. Is that legal? He says. I said, well, I don't know. Let's look. We started digging around, trying to find something, someplace that they could fall back on that would allow that. And about the only thing we could put our fingers on was the Red Cross volunteers. There was no other authority anyplace. So we looked at it, and it even goes in there, and it says that the Secretary of Defense will, via a regulation, identify the type of work that Red Cross volunteers could do. Because he was going to say, oh, they're all Red Cross volunteers. You know? And it spells it out. And budget analysis is not one of the things that a Red Cross volunteer can do. Apportionment, again, that's that further subdivision. That's 31 U.S. Code 1517. And I mentioned to you that you can't obligate in excess of the dollar amount that was provided to you. That would be an Anti-Deficiency Act violation. And you have to observe the limits of the apportionments just as you would observe the limits of the appropriations. That's the dollar amount you can go to. You can't go over that. Now, let's say that you receive a authorization, an allotment, a funding document that does not contain language that says that these funds carry with them ADA responsibilities, i.e. 1341, 1517 responsibilities. You got 10 million in the appropriation. You get 2.5 million in the apportionment. By the time it comes down to you, it's $100,000. And you obligate $101,000. If that funding authority letter that you got doesn't say that this authority carries with it ADA responsibilities, then any entity above you where there is unobligated funds of the same color, they can add to that so that it covers what you over-obligated on. They can add to that over-obligation and thereby not incur an Anti-Deficiency Act violation. Now, the Air Force is really big at that. And they keep their formal ADA limitations at the major command level. They don't push it down to the base. They don't push it down to the squadron. They don't push it down to the motor pool. The Army does. Army shoves it all the way down to the lowest area. If you're sitting out there in the motor pool and you get X number of bucks for you to run your operations and you go X plus 1, you got a problem. Funding flow.
I'm sorry, sir. Can you? I'm not tracking this concept fully. Like, so you could be a comptroller without actually having liability for ADA violations? Is that what that's saying?
Yeah, that's what it says. You got. I was a Navy comptroller, an Air Force comptroller, an Army comptroller in my career, and every time I came into a job, I would have to draft up a letter. I would take it up to the commander. I'd say, boss, what you're doing here is passing to me Fund Certification Authority, and you have received, boss, a letter from the major command, major claimant. You received a letter passing fund authority to you, which carried with it ADA responsibilities. I want you to delegate that to me. And he'd do that. And I said also that in this letter of delegation, I also want you to identify that I have delegation authority. Then I'd take that letter, I'd draft up my own letter, and I'd give it to the budget officer. And I'd say, I'm delegating this fund control responsibility to you, and these carry with them ADA responsibilities. And I'll let you further delegate that. And then he or she would write fund approval, fund authority letters to whatever level below them that they wanted to pass those funds to. So again, it all depends on what your letter says, what your authority is. Okay? Now, let's say that you got a letter, in my example that I gave you, and it's got $100,000 in it, and you exceed that, and there are no unobligated funds available further up that food chain. Now we got a problem. And at whatever level that ADA authority stopped at, that individual would be responsible for an ADA. Let me back up. You, having exceeded the $100,000 I gave you, would be jointly responsible. I always like to say ADAs, by and large, can cover a stable of donkeys. We can go out and pin that tail on anybody who, by virtue of their mismanagement, cause an ADA to occur. Anybody. And if you go and you look at these ADAs that I was telling you about, that annual report, and you read through them, you'll see sometimes there's 4, 5, 6 people, positions, that have been named as being contributory to that ADA. And it might very well have been someone who, I don't know, gave some bad advice to a funding certifying official, fund approval official. So yeah, everybody can be drawn into an ADA. Many people can be drawn into an ADA. If you read the Chapter 6 of Volume 2 of the GAO Red Book, there's 4 or 5 pages in there that go into great detail on this apportionment process here, and who should be fixed with responsibility of an ADA. And basically they say it should be at the level of the highest person who, by virtue of his or her job, would have had knowledge of the use of the funds. Okay? And I'm just capsulized something that goes on for 5 or 6 pages. I don't have the red book in front of me here, but it's in Chapter 6 of the Volume 2 of the GAO Red Book. When I teach that, I spend a lot of time on that particular issue, especially if it's a class to DOD, because Army, Navy, Air Force does their own thing. They do it differently. All right. You've seen this PowerPoint before. I just want you to put a circle around commitment. I want you to write something on that next to commitment. A commitment requires the signature of an official who is responsible for the administrative control of funds. That's my donkey. That's my donkey. That's your fund certifying official. Creates the commitment. A commitment is an administrative reservation of funds that basically says to a obligating official, someone who is, let's say, a warranted contracting officer, use this line of accounting to buy that. And that's your fund control individual. That's the person who's going to say, I'm a fiduciary certifier. I'm saying that these funds are correct under purpose, time, and amount to be used to create this obligation. Three other things I want you to write on this PowerPoint here. A deobligation, may occur because of the cancellation of a contract. So this is one of those questions that it would say, of the below, which event would result in a deobligation of funds? And that would be a cancellation of the contract. You cancel a contract, you're going to deobligate the funds. Second thing to write down. Budget authority is given to organizations to enter into obligations. Budget authority is given to organizations to enter into obligations. Now, why am I telling you that? Well, you'll never see the term obligational authority in a appropriation. You won't even, usually you don't even see it in the funding document, passing the funds down to you. But once you receive budget authority, that is your authority. That is then your authority to obligate, or what we refer to in DoD as obligation authority. Third thing to write down. Here's a scenario. The Appropriation Conference Committee provides $20 million. The Authorization Conference Committee provides $15 million. How much can you obligate? Simple question, straightforward question. And Dave covered this with you earlier. You obligate to what was appropriated. The authorizations do not. You cannot obligate based upon an authorization. You have to have an appropriation. So the authorizers say, here's 15, and the appropriators say, here's 20. You obligate to the 20. Augmentation. There's no such thing as an anti-augmentation legislation. These four U.S. codes are considered anti-augmentation language. So 31 U.S. Code 3302, that is the miscellaneous receipts statute. And that says that if you receive funds from any source and you don't have the authority to keep those funds, you must deposit them immediately, one business day, into the Treasury. You don't have the authority to keep them. Now, if Congress gives you the authority to keep them, then you can keep them. Like, for example, the single largest gift that was ever given to DOD, that was ever given to the government, I want to have this on my next PowerPoint, was given to DOD. We got $53 billion from Saudi Arabia and Kuwait to offset the cost of Desert Storm, Desert Shield. That went into a DOD gift fund in the Treasury. How do you get monies out of the Treasury? Article 1, Section 9, through an appropriation. DOD had to go back to the Congress and identify how that $53 billion would be sliced and diced between Army, Navy, Air Force. 1301, that's a purpose code. That would be augmenting your appropriation. If you violate the purpose code, you're using money for a purpose that Congress didn't intend or didn't authorize. That's a form of an augmentation. Title 18, Section 209 of the U.S. Code. That's where you, and I gave you this example when I was talking with the ethics that I mentioned to you about Mike Espy. receiving some $37,000 of gifts from commercial vendors. And justice went after him. And in this particular case, he was found not to be guilty because there was no quid pro quo associated with this. He didn't do anything in his official capacity that was influenced in any way, shape, or form. At least, put it this way, justice couldn't prove it. And therefore, he wasn't prosecuted. And I told you about Darlene Drunion, who accepted the offer of a $250,000 a year job. Now, that last one, Title 10 of the United States Code, Section 2782, that deals with allowing the Defense Department to keep a payment that would come to it from a vendor from damages that might have occurred to real property on that installation. A vendor comes in with his semi and takes out half of your guard post, real property, guard shack. It's going to cost you $25,000 to repair it. And the vendor says, here, let me write you a check for 25 grand. Can you keep it? Well, now we can. Originally, we couldn't. But Title 10, the U.S. Code 2782, gave us that statutory authority where we can keep funds now where there is damage to real property, okay? Real property, like a guardhouse. Let's say that not only did he take out the guardhouse, but he damaged, destroyed a vehicle that's used by the your police force. And that's going to be an extra $25,000. So he gave you 25 grand for the guardhouse, and now he's going to give you 25 grand for the vehicle. Can you keep that? That's not real property. So the answer is no, you can't keep that. Let me throw one other thing in here because I'm talking about guard services with you. You might want to jot this down on that PowerPoint there. When DOD provides guard services to non-U.S. military, foreign country, military of a foreign country, what do we call that? FMS, I guess, foreign military sales. I would say that's the answer. At least that's what I put down when I took the exam. I don't know if it was right or not, but I put it down. Okay. By the way, what happens with that other $25,000 for the damage to the vehicle, to replace the vehicle? That goes to the general receipt accounts of the Treasury. Here's the logic on that. If Congress wants you to replace that vehicle, they'll give you an appropriation and the authority to do so. See what else we got.
Sir, how is I don't understand the distinction between the real property of a guardhouse versus a vehicle.
The vehicle, you got to look at the definition of real property. Real property is tangible, something that's not movable. Okay. And you're going to carry that in your property records different than what you would carry, let's say, operational property, a vehicle, a computer, a desk, something of that nature. But when they talk about real property, they're talking about basically fixed facilities.
Copy.
And,
so a permanent fixed item is real. It doesn't matter the price tag, the investment, the asset value, none of that matters. It's about being like a at least semi-permanent stationary thing or fixed thing. It has to be fixed in place.
Right. I've got Title 10 of the U.S. Code, Section 2782, right in front of me. It's only one paragraph. The modification here. It says, except as provided in section 2775 of this title, amounts recovered from damage caused to real property under the jurisdiction of the Secretary of the Military Department are, with respect to a defense agency, under the jurisdiction of the Secretary of Defense, shall be credited to the account available for the repair or replacement of the real property at the time of recovery, in such amounts as are provided in advance in appropriation acts. Amounts so credited shall be available for use for the same purposes and under the same circumstances as other funds that are in that account. So, again, specifically said it, and it says twice in that paragraph, real property. Take a quick look at gifts and donations. I made a comment to you there about DOD, a gift to an agency. The single largest gift was given by Saudi Arabia and Kuwait to DOD, offsetting the cost of Desert Storm, Desert Shield. Now, that's found in Title 10 of the U.S. Code, Section 2601. Highlight that, circle it, make sure you know that. That's enough of that. That's all you need off of that. Okay, so here's the ADA penalties. I mentioned to you there are administrative and criminal. The administrative is up to and including suspension from duty without pay or removal from office. You're suspended. You're fired. That's administrative. Criminal, if it is determined that this was a willful, knowing violation of the ADA. I knew it was wrong, and I said, to hell with it, we're going to do it anyway. Those 206s that I talked to you about, that was interesting. And they were in the ADA investigation. They were by name referred to the Justice Department for willful, knowing violation of the ADA and prosecuted, could be prosecuted under this statute, which would be a $5,000 fine, a 2 years imprisonment, or both. That goes back to 1870. Now, $5,000 was a whole bunch of bucks back in 1870, right? Today, you could probably go down to Treasury and use your travel card to pay it. Hell, you buy everything else with your travel card anyway. You might as well pay your fines, right? Joke, joke. Now, 2 years imprisonment is still 2 years in jail. That ain't fun. I don't want to serve 2 years at Leavenworth for a knowing, willful violation of the ADA. So, okay, now that I've scared you, let me tell you this. Nobody has ever been prosecuted, convicted for a willful, knowing ADA violation. Nobody. I've got a buddy that I went to college with that's here in St. Louis, and he retired a couple of years ago, but he was the principal U.S. attorney here in St. Louis. And I'd always tell him, the guy's name was Mike Reap, and I'd say, Reaper, I said, when are you going to prosecute somebody under this statute? And he keeps telling me, he said, we're never going to prosecute anybody. And the reason for that is, he says, he said, I can't get a conviction. I've got 12 people in the jury box, and I got to tell them that somebody used the wrong color of money. Isn't it all green? They don't care. There's no real loss of funds. There isn't. What did I tell you? Fiduciary, pecuniary. Fiduciary would lead to an ADA. But if the pecuniary certifying officer is doing his or her job, no payment will be made. It might be an improper, erroneous obligation, but it's not a loss of funds. He says, we're not going to waste our time, our resources running after somebody when there's no loss of money. That's different than if you commit fraud. He said, we'll prosecute you for that. that we're not going to prosecute anybody for an ADA. Nobody has ever had that happen. So what do you have to do, though, under the FMRs? You still need to go in there and do an investigation. And if you look at the FMR, volume 14, that's chapter 3, paragraph 03 in there. If you went to that FMR, you would see that one of the first things you have to do is generate a flash report. And that is reporting to the agency head, Army, Navy, no, DOD agency. And in fact, it tells you in that FMR that you have to report this to the Undersecretary of Defense Comptroller. I have to tell him or her within 2 weeks of the discovery that looks like you got a problem. And then you go in and investigate it. You follow the investigative procedures that's in the FMR. And then if a violation actually occurred, then you got to report it. And Title 31 U.S. Code 1351, 1517B says what that's all about. But basically, a letter with all backup investigative material goes to the President of the United States. Well, it goes through OMB to the President of the United States, over to the Speaker of the House of Representatives, to the President of the Senate, which is the Vice President, and a copy goes to the Comptroller General, where it gets published. There are, in your course text, there's a shopping list of the items that are included in that report, that letter. I mentioned just a few of them to you. I said the funds that were used, what caused the violation, where it occurred, the dollar amount that was involved in it, the nature of the allegation, in other words, what led up to the purpose code, time code, amount code violation, how was it discovered? Might have been through an audit, investigation, whatever it might have been. The anticipated dates of completion of the investigation, and then names and work phone numbers for members of the preliminary investigative team, and lastly, the corrective action that was taken. That all has to be in that review. Again, that's all found in FMR, volume 14, paragraph 30101. I want to be relieved. I know I committed an ADA, but there was extenuating circumstances. That doesn't cut it. An ADA is an ADA is an ADA. So here is where a lady named Thurston, her last name Thurston, committed an ADA. And she went to the courts. She wasn't satisfied just having the agency tell her that you committed an ADA and here's your penalty. She says, I want to be relieved of that. The courts came out and said, based upon the language in the U.S. Code, 1351, that talks about reporting, investigating an ADA, based upon that language, there is no private right, no action for declaratory, mandatory, or injunctive relief under the ADA. It either happened or it didn't. Okay? This happens to be chapter 7.
Sir,
go ahead.
I'm sorry. It took a minute to get off mute. Can you explain that last bit again? I don't understand that.
That means you can't go to the courts and get relief.
Relief, like the person wanted to be relieved of their job?
No. Relieved of the liability. Relieved of the penalty. The relief of the penalty under the ADA. Okay. The agency said you committed an ADA. The agency said, here's what the penalty is. You're suspended from duty for 2 months without pay.
I see. Okay. All right. Thank you for clarifying. So yeah. She was basically appealing the penalty.
Correct. Correct.
Thank you.
And there is no relief statute, no relief that was granted in 31 U.S. Code 1351. Now, 31 U.S. Code 3527 and 3528, that deals with a loss of funds. That's a pecuniary certification. And I'm going to show you that when I wrap it up here in the last couple of pages. That you can appeal because Congress wrote that into the law. This is chapter 7 of the GAO Red Book, and it says that if we're going to hold your feet to the fire for having committed an ADA because you had an improper obligation, then maybe we should tell you what makes up a proper obligation. And it's a couple of things that I want you to write down on this PowerPoint here. And again, basically deals with a contract. So the first thing up here, I think Dave already told you about this. There's 5 things you have to have a valid contract. This is out of the GAO Red Book, and it's right out of public law. 31 U.S. Code 1501A1 deals with contracts in writing between at least 2 parties for a legal purpose before the funds expire for a definitive level of goods or services. For a definitive level of goods or services. Any one of those 5 doesn't happen, that's not a valid obligation on a contractual document. So what would a contract be? Definition. I want you to write that down here. A contract is an enforceable agreement between a government agency and a business for acquisition of goods or services. A contract is an enforceable agreement between a government agency and a business for acquisition of goods or services. Fact, here it is as our point. Same thing, you circle that, same thing. Okay. CRs. I told you we're going to talk about some of the stuff under CRs. Number 1, they go back forever. It is a temporary appropriation act. It's law. Congress passes a piece of legislation, president signs it, continuing resolution. So it's law. And what it does in essence then is allows you to continue to perform your work functions. Usually the CR has language in it like obligate at a rate not to exceed the prior year's rate of obligations and no new starts. In other words, if we didn't authorize last year, then you can't obligate under the CR for something that wasn't authorized last year. No new starts. Let's take a look at that. Very first thing I said is obligate at a rate. Well, what the heck's that? That is a rate of operations, not a level of, it's a sum of money, not a level of operations, not a flying hour level, steaming hours. Let's just say that last year, 45 days on a CR, last year in those same 45 days, I had 10,000 steaming hours and I needed keep it simple. I needed $10,000 for 10,000 steaming hours. Cost of fuel for those same 10,000 steaming hours, I would now need $12,000. What's my rate of operations? 10,000. Current rate is the amount that was originally appropriated, $10,000. Let's say that, and I told you a little bit earlier about transfer authority. Let's say that some reason Navy transferred 2,000 out of that 10,000 to another appropriation. What would have been my prior year's operations? 10,000 or 8,000? Well, the answer is 10,000. See, what Congress wants you to do is restore anything that was transferred out of the initial appropriation and restore it from the appropriation in which it was transferred out. So you're going to basically get back to what did you look like at the beginning of the year? Annualization. Let's say that I had a program last year that Congress authorized to begin on the 1st of April, halfway through the fiscal year. And they appropriated $10,000 for 6 months, the last half of the fiscal year. What would be my annual rate of operations if I had received an appropriation for the next year rather than a CR? The answer would have been double that. I would need 20,000. 10,000 was given to me for 6 months. What do I need for a year? Double that, 20,000. That's that concept of annualization. See, what we're trying to figure out is how much can you ask for from OMB for appropriation authority? How much can you ask for budget authority for OMB under a CR? This is what I'm getting to. Another example, multi-year appropriations. Remember R&D? I got 2 years of money. Now here, it's a little bit different. It says any unobligated, let's say R&D funds, 2-year monies, that carried over into the new fiscal year does not increase the amount considered as your current rate. So let's say that I got $10,000 under my R&D appropriation. Year one, past year, I obligated 5,000 of that. 5,000 is going to carry over. Now, what Congress is trying to do is always make you whole to what you look like the beginning of that prior year. So to make me whole, I've got 5,000 carried over. My CR would only give me an additional 5 to get me back to 10, which is what I had at the beginning of the prior period. If they gave me 10, I would have 15, and that's more than they gave me as a rate of operations in the prior year. This is the thing here that I think most people working in the trenches do not know. You've probably heard about the daily rate, and that amounts to OMB coming out to the agency and saying, you don't have to send us a request for an apportionment under a CR if you only want the daily rate apportioned to you. Well, what's the daily rate? Let's keep it kind of simple. We received $365 million last year in this O&M appropriation. We get a CR for 45 days. OMB sits down, they look at what you got last year, 365. They divide it by 365 days, $1 million a day. The CRs for 45 days, your apportionment would be for $45 million. It's up to you, though, if you need more, to go to OMB, justify and support your need. Let's say, for the sake of argument, that last year you received $365 million in some appropriation, and you obligated every nickel of that on a contract the first week of last fiscal year. What's your rate of operations? Well, under that CR, my rate of operations is $365 million, because that's what I obligated last year. And I wanted to do the same thing this year. And that's what you'd go back to OMB and ask for. But you have to do that. You have to ask for that. And generally what happens out in the trenches is nobody will tell you about this. Why? NAVCOM's too lazy to handle the paperwork? I don't know. But generally, you go to the Air Staff or the Army staff, or certainly the Army staff, I know. They don't do this. They'll just basically say, you're going to get the daily rate, shut up and go home. The Air Force is pretty good about this. The Air Force will actually ask the commands, and the commands will go to the bases and say, well, what did you obligate during that 45-day period last year? And if that exceeds the daily rate for that 45 days, then we'll ask OMB for that. That's in other than the daily rate is what you're asking for. So let's just say, for the sake of argument, that under the other than the daily rate, you need, last year you got 365 million. So you get it. OMB gives it to you, and you obligate it. And then you finally get an appropriation. Middle of November, 45 days later, you get your appropriation. And Congress, in its infinite wisdom, gives you 360, not 365. Prior to 1982, GAO looked at that as an ADA violation. They changed their mind 1982. Makes sense. They said, look, you obligated against what your authority was back there on the 1st of October. You didn't commit an ADA. Question is, how are you going to pay for that extra $5 million? That's the issue. To remain or to get back within that final appropriation dollar amount. Got to do something. You might have to decrease $5 million off that contract. You might have to pay a penalty for decreasing the contract, but you got to do something because all you've got available is 360, not 365. No ADA, but you got to do something to fix it. New starts, when I talk about new starts, we're basically talking about for example, I got an example in my book here. It says, let's say that, the language on a new start projects and activities means not the number of the projects or the activities last year, but the numbers of projects that you were able to procure or obligate to stay within that dollar amount. Now, that's different than a new start. New starts, as I mentioned to you, were something that Congress didn't authorize last year. And you got a CR, and you'd like to start that, you'd like to obligate against that project. They didn't authorize it last year. Ergo, Congress is saying you can't obligate against that this year because that would be considered a new start. This is an issue. 1985, we already talked about Balanced Budget Emergency Deficit Control Act. Congress was trying to slow down what we were borrowing. So basically they said in that act, you've got to start paying for, you need a bill payer for these large dollar amounts that we are going to appropriate that causes or leads to a deficit. In other words, the language of your budget, if you will, has to be paid for. Now, you might remember that the administration was pushing this BBB, Build Back Better bill, and they said, well, the cost of that is $1.8 trillion. And a couple of senators in the Appropriation Committee in the Congress asked the CBO to score that. Dave talked to you about that earlier. Score it. And one of the things that they asked was that the administration is making the assumption that things that are currently an entitlement today, that are funded today, will disappear tomorrow. What if they don't disappear tomorrow? What will the cost of the Build Back Better bill be? CBO looked at that and said, well, we anticipate that that bill will be about $5 trillion of excess. And the administration, OMB, Treasury only identified 1.7 trillion to cover that. They were going to cover it by tax increases, etc. And they said, whoa, time out. You're missing another $3.5 trillion here. That's what PAYGO's all about in today's terms. Now, back there in 2011, we had the Treasury of the United States come over to the Congress and say, I'm out of money. I'm going to default. I can't pay my bills. I need $1.2 trillion to pay my bills. Please raise the level of my debt authority. Allow me to go out and sell Treasury bonds and bills. I need to come up with $1.2 trillion. And Congress said, okay, but we're going to have to find a bill payer for that. And basically what Congress did is they created a committee, representatives and senators, and said, look at it and come back and tell us, recommend to us, the House and the Senate, where you can cut programs or increase taxes to cover that 1.2 trillion. And we'll accept, we'll look at your suggestions. Without amendments, there'll be a discussion. We won't have a cloture vote. You don't need the 60 votes in the Senate to shut down the discussion. Simple majority. No amendments, and we'll address every one of these items in the House and the Senate. These representatives and senators come back 60 days later and they had 0 proposals. They couldn't come up with a nickel of how we were going to pay for the $1.2 trillion. That's our Congress. I think that those congressmen were from both sides of the aisle. They couldn't come up with a nickel. Therefore, that act, Budget Control Act of 2011, had a kicker in there, and it said sequestration will kick in. And OMB will have to cut every appropriation, 12 appropriations, on a proportional basis for 1/10 of that 1.2 trillion for the next 10 years. See, Congress always costs things out over a 10-year period. So they said that 1.2 trillion will have to be paid back 120 billion a year for 10 years. How many of you guys were furloughed back in, well, you probably weren't, you're military. If I asked the civilians that question, civilians, do you remember being furloughed back there in 2013? You were. DOD had to absorb $120 billion of cuts. And the only way that they found that they could do that was in the civilian payroll area. So they furloughed, I think like across the board, 5-7 days, something like that. You went home and you were not paid. You lost the money. That happened back in 2013. That's what that's all about. Who's a donkey? A government officer or an employee who is responsible for or has custody of government funds. There is, and this is going to be flushed out more when Dave picks up finance with you, but in the federal government, Public Law 104-106 goes back to 1996. Congress said that in DOD we will have certifying officers as had existed in the rest of the government since the 1940s. DOD always got an exception. Why? Well, we're different. We're running around in fields in Normandy. We're running around on ships in the Pacific. We don't have to certify a payment to be made. We'll disperse, DO, dispersing officer, but we're not going to have somebody separate from the DO who's going to certify that the payment is correct, is accurate. That all changed. Public Law 104, 106. A couple of years later, this was 1996, in 2002, in the NDAA, which happened to be Public Law 107, 314, Congress said, we're going to throw another donkey into this pot. And that's going to be something we're calling DAOs, Departmental Accountable Officials, the people who give documents to the certifying officer that the certifying officer is going to rely upon as being accurate to certify that the DO should make a payment. DOs, I don't know who you're dispersing off, Cleveland, Navy Finance Center, Cleveland, part of DFAS now. They're the primary dispersers of your funds on, just general stuff day in and day out. What do they know up there about what you're doing at your facility? They don't know anything about what's going on at your facility. They're going to rely upon your certification that this payment is legitimate to be made. Now, that's all who the donkeys are. Responsibilities. A government officer and employee whose job is or includes certifying vouchers for payment. That's a certifying officer. You don't have any money in your possession, but you're responsible for the legality of those proposed payments. And if it is an erroneous certification, you're liable for that dollar amount the second that the payment was made. Second that an illegal, erroneous payment is made, you're guilty. That's interesting. You generally say you're innocent until you're proven guilty. Nope. By virtue of funds being gone, de facto, you're guilty. You have to prove that there was extenuating circumstances. You have to prove that there was something that took place that was outside of your realm of responsibility, let's say. Illegal or improper payments. I made a statement to you that 2020, $176 billion. It's the certifying officer's responsibility to do three things, really. And you need to know what's on this chart. As a matter of fact, I want you to add, I'll have you add something here in a second. You're responsible for the existence and the correctness of the facts that are in that voucher, that certificate that you want a payment to be made against. You got a contract, you got a receiving report, you might have a statement of acceptance, not just the fact that you got them, but you got the correct ones, and you need an invoice. You're going to certify for all. That's a package. That's a payment package. Now, this all might be done in WAF electronically, but it has to be there. Secondly, you're responsible for the correctness of the computations, i.e. the numbers add up. Third, your responsibility for the legality, purpose, time, and amount. See how that comes right back to fiduciary responsibility, fund certification? You're responsible. Everything that I've been telling you for the last 3 hours regarding ADA, you're responsible for that same stuff. You're not responsible for committing an ADA, but you're responsible to know that the payment is legal under purpose, time, and amount. You're liable again from the amount of any illegal or improper payment, and you're liable for the moment that that payment is made, that the payment is made. What are you certifying to? Well, let me back up. These 6 items, and you need to know these. These are not allowed for you to use to fall back on to seek relief from liability. Remember, I told you there's a relief statute here. You can go in and you can ask to be forgiven, relieved of that erroneous payment responsibility. Okay. Let's see. I got another one here. Yeah. Says, I teach a 1-day certifying officers class because, as a matter of fact, Treasury, the law, and Treasury regulations says that if you're going to be a certifying officer, you have to have had training. So I do a 1-day certifying officers class. And one of the things I tell people right at the beginning is, when in doubt, don't sign. Don't certify. If there's anything missing, if you know that the guy on the loading dock who has to sign that receiving report or put it into WAF hasn't been sober a day in his life, why would you certify that what he's telling you was received is accurate? You just want to, if it doesn't look right, kick it back. Just don't do it. Because once you certify it, that DO, that dispersing officer, is going to make the payment. And if it is erroneous, you're going to be held responsible to pay it back. And again, now it becomes your responsibility to prove that there was extenuating circumstances. If you feel that you're not sure about the viability of a payment, here's what DOD says. Now, I disagree with this, but that's none of my business. DOD claims that a certifying officer or a dispersing officer has a statutory right to seek an advance decision from the DOD General Counsel regarding the lawfulness of any payment to be certified or made. And this is what I disagree with. You can ask your legal guys for an opinion. That's okay. They go on and they state that this procedure will insulate against liability. Now, I want you to jot something down on here. This is another CG, Comptroller General decision, B 307-693, 12 April 2009. A certifying officer on a purchase card payments went to the DOD General Counsel and asked for an opinion. Was told by the DOD General Counsel that he's certified inappropriately and therefore was liable to pay the government back. This guy's name happened to be Jeffrey Elmore, and he was a certifying officer in DLA, Defense. And he said, well, I'm going to go to the GAO. And he went to the GAO. And he said to the GAO, hey, these guys in DOD, the General Counsel and DFAS, they told me that I could not get relieved. I'm asking you to relieve me. And what was interesting was, basically, is that the GAO said, who's DFAS? Under the law, we've got the responsibility to advise you. And if we advise you, that will insulate you from liability. General Counsel can't do that, except, here's the deal, except, GAO went and looked at it. If you work in a military department, Army, Navy, Air Force. If you work in a defense establishment, DFAS, DECA, DLA, defense mapping, whatever, then you have to go to the Comptroller General to get a decision. that's where we are right now. Okay, I got a couple more charts and I'm done. Then we'll take 10 and we'll let Dave jump into dispersing. I told you that there are two relief statutes, if you will, regarding the loss of funds. 3527 deals with a physical loss of money. 3528 deals with an improper payment. So you need to understand that. So CG must grant relief, Comptroller General, if the Secretary of Defense determines that relief is appropriate given the criteria specified in these two sections of the U.S. Code, 3527, 3528. DOD says, SecDef has delegated responsibility to DFAS for making determinations as to relief. Take me back to this. Advanced decision. So basically, on one hand, they're saying as a certifying officer, if you go to the DOD General Counsel and they tell you, oh, go ahead and make the payment, it's legitimate, you do, and it turns out it's inappropriate, now you got to go back to DFAS that relieved the responsibility. And as I told you, if you work as a certifying officer in a military department, in that Army component, Air Force component, Navy component, then this applies. But if you work outside of that in any defense agency like DLA, it doesn't apply. Criteria varies then depending on whether there is a physical loss, which is 3527, or an improper payment, which is 3528. Now, let me see here. I got there's 1, 2, 3, 4, 5 questions off of this. So let me give you some other stuff you got to add on here. Just know that 3527 deals with a physical loss and 3528 deals with an improper payment. What it says is that you can be relieved if you show that you used reasonable care in certifying the documents. So what I've got for you is two definitions that deal with reasonable care. So here's the first one you need to jot down. The reasonable care standard is applied in determining whether an AO, that's an accountable official, is negligent. The reasonable care standard is applied in determining whether an AO, an accountable official, is negligent. That's the first thing. We're going to apply that standard. All right, here's the second thing. What's the standard? Reasonable care is not the same as reasonable doubt. An AO does not need to prove innocence beyond a reasonable doubt. You don't have to. Reasonable doubt's a much higher level of defense than reasonable care. Let me give you an example. Let's look at it in terms of cash. I am a dispersing official on a ship. I've got a safe. I've got money in it. I lock it up at night. I put the money, cash, petty cash, in the safe, and I lock it up at night. Sometime during the night, somebody comes in, busts into the safe, steals all the money. You as the accounting official, the accountable official, you sign for that money that's in there, and now it's gone. So de facto, you're guilty. You've got to prove that there was extenuating circumstances. So you just want to jot this down someplace. This is called, what was the proximate cause of the loss? Proximate. What was the proximate cause? The proximate cause was the burglary, the theft. That was the issue. You're relieved of liability. There's a statute of limitations on improper erroneous payments, 3 years. 3 years from the time that it is detected. Now that might be DFAS detects it, Comptroller General detects it, somebody detects that there was an improper payment. If they don't detect it within 3 years, then the theory is that it never happened. It's not that it's automatically relieved, it's just that it never happened. For fraud, there's no time limit. You commit fraud, and they're going to dig you out of your grave and take the gold fillings out of your mouth to pay the government back. What I mean by that is they can attach your inheritance. They can attach your estate if it's fraud. That gets us back to one of the first PowerPoints I told you about here, and that is the established rule is that expenditures of funds is only proper when it is authorized by Congress. You can't assume that the Congress was silent on something, that gives you the authority to do something. Brings you back to that. Now, you don't have, those of you who have a textbook, there are 3 pages, page 52, 53, and 54 of definitions. Those of you who don't have a text, I want you to write down these terms, and you better look up the definitions thereof. Authorization, Feed and Forage Act, obligations, sequestration. In the material that I sent through Rodney to you, that electronic material, I sent out a Mod 1, Mod 2, Mod 3 answers to the knowledge checks and to the different case studies, different exercises we had. Read case study number 3.1.6. Read and understand case study 3.1.6 and 3.1.8. That's it. You are duly trained up on federal appropriation law. So go ahead and take a 12-minute break. That'll get us to 5 till 4, and Dave can get started on finance with you.